Hey everyone, welcome to another episode of Inside the Markets with Caleb and Brown. Today we're going to talk about the month of November and what's in store for December, the final month of the year. So, starting it off, Bitcoin recovering from November lows. I will get into prior market activity in the last few hours in a second. But before we get into that, we were looking okay for a period. We were recovering from one of the lower price points Bitcoin has seen in 7 months. We hit a low of about 80,000 US dollars. That pullback wiped out about $1 trillion US dollars worth of cryptocurrency market cap. This might sound glaringly terrible, but a 30% drawdown from all-time high has happened many times before in other bull markets, including 2013, 2017, and 2021. Some people are very concerned. We saw the fear and greed index tick all the way to maximum fear. Generally speaking, you want to buy when it's maximum fear, you want to sell when it's maximum greed. So let's see how that commentary ages. Bitcoin's recovered back to the 90K region, did suggest it was being defended by spot buyers. There was a lot of buying activity there. No major long-term holder distribution occurred during the sell-off, which is consistent with a mid-cycle flush and not a cycle top. So some positivity there. However, breaking news, Bitcoin did fall $4,000 on mass liquidations just a handful of hours ago. We're recording this Monday afternoon Australia time, and in the last few hours we have seen Bitcoin retrace all those little recovery gains that we saw over the last week. The Kabisi letter, which is a great Twitter account to follow, it's a free subscription and they give very quick live updates on the market. So the whole office was looking at that with keen eyes while we saw all those gains that we made over the last week retrace. Selling pressure had begun to ease a little bit. So we were seeing a little bit of a recovery and things were looking optimistic. It did appear to be just a mid-bull market sell-off, which is quite natural. The issue here is a number of things. One, over the Thanksgiving extended weekend, there wasn't much action. And because the market is experiencing all-time high leverage, it's very easy for small little movements in either direction to either pump the price dramatically or cause major sell-offs. Tradfi, rate uncertainty meets AI bubble fears. So looking more broadly at macro, the US government shutdown finally ended after 43 days, clearing a backlog of missing data. Non-farm payrolls surprised to the upside, 119K versus 53K forecast, reigniting debate over the Fed's next move. The Fed and the decisions there, which will be coming very shortly, will ultimately be main drivers of what the broader economic future looks like, which will of course impact risk on assets such as cryptocurrency. FOMC minutes revealed strongly divided opinions on a December cut, while Governor Williams hinted at near-term easing. Market odds for a rate cut rose to 87% by late November, lifting equities off their local lows. AI still dominates earnings growth. Q3 marked the strongest year-on-year earnings growth since 2021, driven almost entirely by the AI sector. AI-linked firms delivered 27% of earnings growth versus just 9% for its non-AI peers. Nvidia's profits jumped 65% to $31.9 billion US dollars, easing fears of an imminent AI bubble. Despite mid-month volatility, strong earnings suggest broader resilience beyond just this AI hype. In fact, the S&P 500 overall saw 14% year-on-year earnings growth, double what was expected pre-quarter. The tech sector posted an 89% beat rate. Nvidia's quarterly revenue hit $30 billion with net income over $31.9 billion on trailing 12 months. Analysts note that AI earnings concentration is so strong that without AI firms, S&P earnings growth would be flat to slightly negative. Trade tensions ease but remain a risk. One of the larger topics of 2025 has been the consistent uncertainty of what Trump is going to say next and how that's going to impact the broader landscape. And of course, the tariff wars and the like has really been the driver of that. November saw calm progress on US-China and US-EU trade fronts. Trump and Xi's November 24 call was described as very good. And they have reciprocal state visits planned for 2026. The US Supreme Court Tariffs Authority review could spark volatility if rulings go against the administration. However, market focus now shifts to December's Fed decision and potential appointment of a new Fed chair, which could spark some more volatility depending on what people's reaction to the new chair will be. Now, Bitcoin's 4-year cycle, is it broken? Is it here to stay? The 4-year cycle of cryptocurrency bull bear patterns is spoken about probably more than really any other long-term trend prediction out there. A lot of people are starting to suggest now that cryptocurrency has migrated away from being this super nascent asset class to really just being grouped in the broader subject of risk on stocks. And we have seen that there is greater parity these days between broader markets with the cryptocurrency market, and liquidity really is the key here. So back to Bitcoin and crypto, some analysts do suggest Bitcoin cycle is now driven more by liquidity than it is by halving events. With US government debt equal to GDP and global liquidity trending upwards, easy money may extend this cycle all the way until 2026, with a lot of analysts suggesting that liquidity is really the driver of this bull market more than anything else, not halving events, which were often the case and the sign to point to in the past. Coinbase institutional research shows a 0.9 correlation between their global liquidity index and Bitcoin price over multi-year periods. Global M2 money supply has begun rising again after contracting in 2022 and 2023. Historically, this is supportive of Bitcoin. And liquidity-anchored cycle theory suggests Bitcoin is shifting from 4-year halving cycles to 4.5 to 5.5 year cycles. Anyone can have an opinion here, but the success of Bitcoin and the extended shelf life of Bitcoin's bull cycle will ultimately likely be positive for altcoins and momentum across the space. Some macro analysts see this business cycle extending into Q1 and Q2 of 2026, aligning with the US midterms. Historically, late cycle expansions have supported risk assets as liquidity flows return. Ending quantitative tightening in December could remove a headwind and open space for easing. And we can expect rising liquidity and rate clarity to fuel optimism in early 2026. Now looking further ahead. So we've got some upcoming catalysts which are very important to take note of. December 1, US quantitative tightening ends. December 3, Ethereum for Saka update goes live. The 10th of December is the next FOMC meeting where there'll be a rate decision. Prediction markets are suggesting there will be further rate cuts. December 30, minutes from the FOMC are released. And ongoing throughout the month of December as we close off this year, US-China trade progress and Trump's potential Fed chair appointment. So some final thoughts to wrap this up. November's volatility reset over leveraged positions, selling pressure and risk-off signals are easing, whale and institutional buying is re-emerging, and liquidity trends are improving in December. December brings pivotal macro catalysts. A few more notes to tie off here. Swissborg's risk-off signal has now dropped out of the extreme zone, historically marking bottom structures. That is the case even in light of the last few hours sell-off. We haven't dropped to where we were just a week or two ago. So if we do recover from here, maybe things will be looking optimistic. Bitcoin whale wallets, as defined by wallets with over 1,000 units of Bitcoin, increased holdings by 27,000 Bitcoin in the last 10 days of November. ETH staking deposits increased by 150,000 ETH into the Fusaka upgrade window, and liquidity, policy shifts, and technical bottoming patterns all align more with a mid-cycle reset than they do with a cycle top. Hopefully we have more steam in this cycle. We'll see how we go over the last period of December. All the best, and until next time.